for a hike, and that has not happened, so they might just wait it out. I don't see a big inflows coming as a result, but it is outflows this time.
Alright, that's some perspective on the markets out there. Let's bring in Vijay Chopra, Managing Director and CEO of Enoch Ventures, joining in as well. Vijay, thanks so much for taking time out today. It's clearly been a pretty hectic week in terms of the way the markets have been panning out. Global developments clearly were the big spotlight. We managed to see some bit of boost on the back of the fact that you had a status quo coming in or a pause coming in from the FOMC. But the fact here is, well, what's the road ahead looking like? Can we manage to sustain this kind of gains, or you believe it's against going to start consolidating as we have expiry week next time?
I think that consolidation should happen because whenever markets go up without consolidation, we see that they come down the way they go up. So I think that consolidation should happen, number one. Number two, I think that the global worries are far from over. Europe is still struggling. We saw what happened in Brazil. Australia, is struggling. US, again, they are postponing problems. We are seeing a lot of, other kinds of political and, terrorist kind of activities happening in the Middle East. There are economies which are completely dependent upon crude, and crude is cracking. I think that the global turmoil is still there, and we cannot just, shove it off from ahead of us. So I think that markets can correct, in due course of time. But again, there would be cautious optimism, if I can use these words for Indian markets. Again, India is at a sweet spot. The commodity prices are low. The current account deficits, fiscal deficits are manageable. The inflation, which was the biggest worry in the Congress regime, it is well under control. And the rate cut happens to be around the corner. So if at all there is a 25 to 50 pips cut, going down the lane. So I think that markets can, again, raise up the standard 283, 100, 84, 100 on Nifty. So again, cautious optimism on cards, and I think that the overvalued stocks have corrected a bit, and there is valuation. There is good value in the stocks and certain counters. So I would be bullish on consumables. I would be bullish on paints. I would be bullish on autos specifically. Two-wheelers and four-wheelers, given the festive season is around the corner. So these would be some stories I would be looking at in the coming weeks.
Well, Vijay, hold that thought. In fact, Janet Yellen's decision to maintain status quo has actually brought the spotlight back on Raghuram Rajan, the RBI governor, today sidestepped the debate on rate cuts and reiterated the policy guidance he gave last month. He also warned that India must resist calls from special interest groups and that faster growth will come at the price of a higher inflation.
India must resist special interest pleas for targeted stimulus, additional tax breaks and protections, directed credit, subventions and subsidies, all of which have historically rendered industry uncompetitive, government overextended, and the country incapable of regaining its rightful position amongst nations. We have to create the business environment, but then business has to run on its own footing, not because of privilege, because it creates effective business. In this difficult environment, growth has to be obtained the right way. It is possible to grow too fast with substantial stimulus, as we did in 2010 and 2011.
And it hasn't happened because of the structure of the banking sector.
I think we have to cut. The question is not whether RBI will cut or not. I think almost everybody is cutting RBI will cut. Now the question is going to be how much. I think another 25 basis point may not have the right impact because we already had three cuts of 25 basis points. So a lot of us are hoping that, maybe 50 basis point now with a very dovish commentary and another 50 after 3 months. We need 100 to 125 basis point cut over the next 5-6 months because that will truly spur the economy. And we can afford it because inflation is low.
Right, that's the perspective from corporate India. But this has really been the big debate. What are your expectations? Are we likely to see some bit of movement from the RBI when we talk about rates?
Well, I think that the rate cut can, my sense would be that can come before 29. Because, the lobby is very strong and, the voices regarding rate cuts have been increasing. There has been a great demand from the industry. And of course, I am a great supporter of the fact that, until and unless you support the industry to grow, the cost of capital should come down. Because the credit offtake in the you've seen all the financial institutions and banks, it has not been that good at all. So that would improve the credit offtake. That would improve the cost of capital. That would also improve the balance sheets of the banks, because the companies which are going bankrupt, or they're not able to service their debt, the numbers would go down considerably. So I think that the rate cut should happen, 25 bips at least, and my aggressive expectation would be 50 bips.
All right, Vijay.
Essentially, Rajasthan, Andhra Pradesh, UP, amongst others, who have the maximum amount of debt at this point in time. If you look at Rajasthan, it's about 61,000 crores, the discom debt at this point in time. And just to service that, 3,000 crores is what they don't have in the coming 2 quarters which are left. So there's bonds which are going to be really issued, and the centre will give a little bit of leeway, and also maybe tax relaxations to the state governments to go ahead and do it. But the big point here is, and what I've picked up from sources, is that the Prime Minister has said, given a go-ahead, telling states to go and increase tariffs. That has to be done. That is the only long-term solution to put this debt mess in crisis, in context at this point in time, and of course reduce the AT&C losses. That's the word which is coming in from, and the Prime Minister himself involved in making sure that this is really sorted out very, very soon.
Alright, mate, thanks for those updates. Vijay, this has been an interesting space when we talk about the woes as far as the power sector is concerned. Do you believe if the government starts taking some bit of steps in regard to SEB, it could be a space to watch out?
Definitely, if the balance sheets start improving, if the government starts, helping these bleeding units, I believe that there's a lot, it would be good for the banks, number one. The sector could be entirely re-rated. The problem with the discoms and the power sector has been that, even after they've produced power, they've commissioned, large units, the money doesn't come back from the state governments, or, from people, whoever they sell power to. So this happens that the cycle is not getting complete. So, the government has to work on the end-to-end solution to this problem. One, that, these ailing companies should be helped to sustain, because India is anyway a power-hungry country. Number two, whatever power they are producing and they are selling it to maybe, states, electricity boards or wherever, so that money has to come back to them, so that the balance sheet at least looks healthy. So there is money on the receivable side, written on the receivable side, but it is never received actually. That's why these companies have been making losses heavily. So I think that this is a good initiative by the government of India, and they should work towards setting this right.
Alright, Vijay, hope that's all. We'll take a quick break, but up next, SKS Microfinance takes a knock after losing out on a small bank license. Brokers turn bearish on the stock. More on that after this break. Stay tuned.
from the stock. In fact, the transition phase of the small banks can actually throw opportunities for SKS Microfinance. So they're actually recommending to buy the stock on any dips that we see. So basically, a lot of pessimism on the stock is what we're seeing.
All right, Shraddha, thanks for getting us those updates. Vijay, any thoughts on SKS Microfinance? The stock clearly was one of the most active one as well in terms of trade today, and the fact that it lost out quite heavily. What do you make of it?
I think that the stock can slide further to about 360 odd, but there I think that it's a great buying opportunity. If you look at the numbers speak for themselves. You know, the net profit in the June quarter has been about 61-62 crores, which is no mean achievement for a MFI. You know, their presence and their model is still robust in certain states. So I believe that, you know, it's definitely a knee-jerk reaction to the news, and it can further correct maybe, you know, 20-25 rupees. But I think that would be the level where it can probably settle down, and then you know, the stock can be bought into.
Right. In fact, let's go first to Vivek, who's got a list of mid-cap stocks that were in the limelight as well. Vivek.
Talking about the mid-cap index, it closed half a point lower. In focus today were the pharma stocks, where companies like Fortis Healthcare closed up almost 10%, and the company is planning to add almost 300 to 500 beds a year, and also plans to implement robotic technologies. Also looking at Abbott India, the stock closed up almost 6.5% higher, and the company went ahead and bought office space in Mumbai for almost 1,400 crores. Also a stock like Daniels India that was up almost 5%, and the company got a US FDA approval for the ibuprofen tablets. Also at a 52-week high was Pfizer. Looking at some of the other newspapers, we had a stock like Torrent Park, where the government actually announced the revival of 5 additional gas power generation plants, and the company is trying to bid for gas supply via the e-auction route. Stock closed up close to 5% higher. Looking at a stock like PNIL, the stock closed up again close to 5% higher, as the company won FM auctions in Bangalore and Hyderabad that were major cities among the other cities that it won. Also looking at a stock like Info, the stock closed up almost 5.5% higher, as CLSA upgraded the stock to buy from an outperform and kept the target price at 950 rupees a share. Also a stock like Adani Enterprises that was up almost 4%, as the company is looking at acquiring a controlling stake in NG Store's Indian asset at Andhra Pradesh. Looking at some of the other gainers like Mahindra Lifespace, Broadway Phillips and Balram Puccini, the stocks closed up almost 10 to 20% higher. Looking at the banking contours, we have stocks like UCO Bank, Andhra Bank, DCB Bank, IDBI Bank, all up in the range between 4 to 7%. Going on to the loser section now, we had SKS Microfinance that was the top loser today. That was closed down almost 15.5%, and the stock did not make it to the list of small bank license receivers. Also stocks like IVRCL, SE Investments, Purvanka Projects, and Imami all closed down between 5 to 8%. Looking at some of the volume buzzers, we had stocks like Future Consumer Enterprise, where the volumes were almost up 40 times its average volumes. Also a stock like Crystal, where the volumes were up almost 30 times, and IIFL Holdings, where the volumes were up almost 30 times. Back to you.
All right, Vivek. Thanks for getting us those updates there. Vijay, any mid caps, anything that you've been looking at in this market from the broader market space?
Well, I think a couple of stocks, your colleagues talked about was, Pfizer and Abbott. These are the stocks which are on my radar, and these are zero-debt companies primarily, and fantastic business models and fantastic products they have. These are some companies in the pharma space. Crystal again is one company I like. I think that this stock has the potential of crossing 2,000 in a very short term. These are some of the names I'm regularly tracking. I also would say that companies like Motherson Sumi, which have corrected quite a bit, are great buys at these levels. Companies like L&T Financial Holdings again, it's a great buy. Marico and Dabur also are some companies which I like.
All right, Vijay, we'll leave it there. Thanks so much for taking time out today to talk to us and sharing your perspective on the markets. And that note, it's a wrap on this edition of the show. Thank you for watching.